Well, in business tonight, more twists and turns in the tariff war, keeping investors on edge after extreme gyrations in most markets this week. Investor confidence in American assets eroding, with the US dollar weakening against major peers and US Treasury yields uncharacteristically rising, despite its traditional status as a safe haven asset. Instead, investors are turning to gold. Economic uncertainty driving bullion to a record high earlier today. It has since eased, but it is still near its best. Global stocks have been experiencing some of their biggest swings in decades. Markets in Asia ending mixed today, but China's revised tariff on American goods threatening another wild run next week. Beijing releasing that announcement after most markets in this region had closed. European stocks marginally lower on the back of Beijing's latest bite back. Europe stocks 600 opening higher. It's staying up now 0.5%. After China's retaliatory levy at the United States, U.S. index futures initially dropping after Beijing's move has been volatile since. The previous session saw Wall Street wipe out most of its gains made during Wednesday's historic rally. And for more, we're joined by Claudio Galimberti. He's Chief Economist and Global Director of Market Analysis at Rystad Energy. Mr. Galimberti, earlier we spoke to our correspondents, both from Beijing and Washington. Our Chinese correspondent said we could see China saying it would not hike tariffs any further, whatever Washington might choose to do, because this serves no practical purpose anymore. Do you see this as a way of one side, at least, willing to draw a line in the sand, at least on tariffs, and therefore a line in the sand perhaps for how markets might react in the days ahead?
Thank you for inviting me. I would say that I welcome the news for sure. I mean, this is drawing a line in the sand and say we are not going to go any further. That hopefully is going to stop the spiraling. I would argue that at this point, marginally increasing, continuously increasing doesn't necessarily make a big difference. So the fact is that we are, as far as the United States and China are concerned, in a huge fight when it comes to trade. And the news that China said we stop at 125, hopefully, is going to stop the spiraling. I would say that in order to be to see a kind of a calming down in the market, we would need to see at some point, all these negotiation will need to come to an end. So as long as we continue to see a negotiation going on, there's going to be uncertainty in the market. And this is what's fueling the volatility. So the news for sure coming from China is a good news, right? So that there is no doubt about that.
But, reciprocal tariffs, and that's just a 89-day pause on that now. Even if those do not go ahead, you already have a 10% baseline tariff on everyone. How can we hope for negotiations to end to any kind of settlement that will last for the next 4 years?
Yeah, you raise an excellent point here. So there is a lot of fog still in all of these negotiations. So there have been multiple shots that have been fired starting from the U.S. administration, and then counter shots in some cases coming from multiple countries. For sure, China is going to be has been the most active on. But there is this 10% of tariff, of universal tariffs that we didn't have before. I think that these probably has the hallmarks of being something structural coming from the U.S. So the U.S., if you think about it, if you read carefully what President Trump has stated many times, he absolutely wants to reduce the trade deficit. He also absolutely wants to repatriate manufacturing. This comes with additional costs. And the 10% tariff is probably, if I was to bet right now, something that's going to be more structural. All the other kind of tariffs that have been floating around, even the one, possibly the one against China, those, in my view, are up for negotiation.
So, Mr. Galimberti, you are in fact seeing consistent and coherent strategy coming from the White House.
The way I would put it, Wei Su, is that probably what I see is that from a strategic standpoint, what this administration wants to achieve hasn't changed at all. So they stated from the get-go that the repatriation of manufacturing supply chain is their priority number one, along with the reduction in the trade deficit. Trump has always seen trade deficit as a losing proposition, and then also federal deficit. There is also something very interesting that President Trump said at inauguration. He specifically quoted this moving from the internal revenue service to the external revenue service as a way to raise taxes. That was, I wouldn't consider that necessarily a joke. So there is going to be more revenue that this administration is going to get from the tariffs. And this is so what this administration, when Trump said at the beginning, hasn't changed. What's really changing, what's been changing is the tactics. And we need to, unfortunately, get used to that. So the tactic, which is something that obviously moves the market, that the reason why we see these enormous swings in the market, that volatility is all this continuous announcement and change. But I would call them more the tactic, right, in this, let's call it war, in this trade war. The strategic goals haven't changed at all.
So take Mr. Trump seriously, but maybe not necessarily literally. Mr. Claudio Galimberti, Chief Economist and Global Director of Market Analysis at Rystad Energy. Still ahead on